The Great Depression was caused by overexuberance in the stock market through the course of the Roaring Twenties. As a result of Black Monday and Black Tuesday, the stock market crashed and then didn't recover to its highs of the October of 29 until 1955. That was 26 years. How is that relevant to our current situation? Well, we are in the Roaring Twenties again, and we had an overexuberance of money flowing into the market by increasing our money supply by 40% in a matter of 10 months. Where did that money go? It went to the stock market. It came into your home. You invested. It went into the stock market. It drove prices up, and now prices are down. Is it going to take another 26 years to recover? This is what we have to learn from history, and that's what I'm here to do, to educate you as to history and to look at history and say, is this going to happen again? I want to take you to the charts. I use trading views. I suggest you get comfortable with trading views and see what exactly happened, and then look back on the subsequent history from 1955 on to the next 26 years, and then the next 26 years, and the next 15 years, and take a look at where we are now. How is it relevant? How can I educate myself so I know what's going to happen next?
Best of Us Investors presents Carrie Griegmeyer.
This is my chart from Trading Views on the Dow Jones Industrials going back all the way to 1897. And what I want to show you is the movement and get some relevance as to how the Dow has dealt with the adverse situations it's faced, and most of those are brought on by bad management of our banking system and our financial system, and I'll show you that. This right here shows you from actually from 1897 into the Roaring Twenties, and we see the market hit a peak here in roughly October of 1929. And then the market crashes, and this is the Depression. It is caused, as I said, by the Roaring Twenties, overexuberance, about a flood of money coming into the market, and it crashed 88.56%. What is important here is to recognize it then took 26 years until 1955 to reach its high of 1929. Then what I wanted to show you was the following 26 years. It took from 1955 to 1981 for that 26 years, and the market went up 161%. Now we move forward another 26 years from 1981 to 2008. And in that 26-year period, we have an increase in the market value, the Dow value, of 1,414%. You must realize this is when quantitative easing came in. This is when we came out of a gold standard, and our government had the ability to print money. Then you have the next 15 years, and as you can see, from 2008 through today, which is 15 years, it went up 113%. If we take this and move it at its peak had been up 166%. But right now it sits at a 15 years. The question is, where does it go from here? I can't argue with anybody who says we are currently in a recession. I think that's true. And I think it is a self-inflicted recession as a result of poor monetary policy. We just have to recognize we increased the money supply in our country by 40%. You can't give everybody a lottery ticket and tell them they're a winner and not expect inflation to occur. There will be a rush for goods, there will be a shortage of goods, and then there will be a escalation of prices, particularly when you're recovering from a 2-year period when people made no profits. And I'm speaking very directly of the oil companies at this time. So it's to be expected. And then it's from that point what's going to happen next. As I've done in some videos, we're going to deglobalize. We have to deglobalize. We have to get away from our dependency on other countries to provide us our necessities. I just read in an article today that we had an $86 billion trade deficit this past month, meaning that we bought more goods from China, from India, from any number of countries than we shipped them. That's where our money is going. It's being hoarded in other countries who have a weak currency, and our dollar is gaining strength while our interest rates are going up and our inflation is going up. So we've got to get this in order. We have to become a manufacturer again. That means that technology has to step in. We are trying to get our own semiconductor plants built. We need a little help from the Congress, but I think we're on a path that technology is going to bring us out of this. Back in the Roaring 20s or back in the Depression, they didn't have this level of technology. We have woken up that our healthcare system is broken, that our supply chain is broken, and we have the wherewithal in technology to make it happen. I again tell you the most important thing that's happened to me in my life is that of the coronavirus and the awareness that the healthcare system and genome sequencing, genome editing. I just bought some Oracle stock. I'll show you here on my Moo app. So what am I doing? I'm buying stocks. This is my mobile app on Moo. I just bought some Oracle today. And if you saw yesterday's video, you know why I bought it. This is a chart of Oracle. It's currently selling at $71.31. And as you can see, the chart shows it's on a bit of an upward move. But I believe from what I told you yesterday, Oracle is a player in the healthcare business in the future. What this has done for me is detether, if you will, from my desktop computer where I used to do all my trading. Earlier this week, I bought some CRISPR stock in the waiting room of my wife's ear, nose, and throat doctor, and it has served me quite well. As you can see, CRISPR is up 5% today. It was a good buy. I don't know what I did before I got a mobile app. I'm so glad I did. And I encourage you to go to the link in the description and find Moo. They're anxious to give you some stocks for opening an app and making an investment. And I'm buying into the other Amazon, Google, Apple, Microsoft that I think are going to take me into the future. I guess my final message is this is an opportunity. Is this the bottom? I don't know. I do believe that there's going to be some disappointing earning reports from Apple, Google, Microsoft, Amazon, and there will be additional buying opportunities. But I'm buying some small quantities of those stocks now. And as I say, I have introduced a new element to my life in the form of the ability to do my trading on an app on my phone, something that I didn't have in the past. And I would encourage you to look into Moo. They're anxious to give you up to 10 stocks if you'll sign up and make a deposit and then get active on their platform. They are insured for $500,000 worth of equities and $250,000 worth of cash, just like every other brokerage account that you might have or you might consider having. Give them a look, and I think you'll find it a wonderful opportunity.